You're looking at the monthly chart of the Nasdaq, which was up 998 points or 5.96% in June. It closed at 17,732. Welcome to my weekly review. I wanted to cover a few things today that I think are important and just, give you my opinion of the state of the market. Everybody's got an opinion. I'm going to give you mine. I want to go back a little bit though, because I'm seeing a lot of negative Nancy's. And I can't tolerate negativity. Yeah, they're using macro data to imply that there's going to be a market crash here because, of the debt. And you can always use something, some data point to, support your narrative. But I'm just going to go with the reality and the facts of what has actually happened. We've had four severe bear markets in the Nasdaq in this century, and you can expect one every 4 to 5 years on average. We had the dot-com crash coupled with the 9/11 disaster, which created a 3-year bear market from 2000, March of 2000 to 2003. We had the global or great financial crisis of 08, 09. Those are two severe bear markets. Then didn't have one until we had this pandemic in 2020, which was a 48% drawdown, peak to trough in 2 months. And you say, oh, 2 months, how can it be a bear market? Whenever an index is down 48%, that's a bear market, folks. It recovered quickly, had this V-shaped recovery because of monetary and fiscal policy, reacting to the crisis. And then we had the Fed-induced bear market of 2022, 38% peak to trough when multiples contracted as the Federal Reserve raised interest rates. So we've had two bear markets in 4 years, and I just don't think we're going to have three in 4 years. I just don't think it's going to happen because historically it hasn't. Like I say, you can expect one every 4 to 5 years. My opinion is that we just started a bull market a year ago back in May. This is a weekly chart, and you can see I'm going to get the track price on here. I believe we broke out of this consolidation, this bear market in May of 2023. So we're about a little over a year into this new uptrend. Of course, it doesn't go straight up. We've had this three waves down. Last fall, and then this year, 2024, has been a pretty spectacular year with the one pullback here. And I'm going to go to the daily chart now, which will pick up on this. Here's your three waves down that I just showed you on the weekly. And then it's been in a pretty nice run, from the November or the October 26th lows, and then it ran up and had a little hiccup here, traded below the 50 simple moving average. And then April 19th, it made a low, and it's rallied ever since that low of 15,222 on April 19th. It's been respecting its moving averages, pulled back to the 21 once, but since then it's been respecting the 10. Now this week, as I get more recent, I was more cautious this week because of a few things. This bar right here bugs me a little bit. I gotta be honest, the Thursday reversal bar, where it made a high of 17,936 and reversed lower. It had 3 days down, and then Tuesday, Wednesday, Thursday, it recovered. Had a pretty respectable, stable trading week, but overall, it's just a little bit too far above the 50 simple moving average. If I zoom in here, you can see that it was a 8.3, 8.2. If you can see that SMA 50 in the red there, 8.2% above that 50. So typically when it gets above 6, it wants to pull in, and it's respecting its 10. It wants to go higher, and it made a new high, above the Thursday high. So the index making new high tells you it wants to go higher. Yes, this is a reversal bar lower with the, broader daily range. But I'm thinking that it's just pulling back in now to 5.9% above the 50. Maybe it comes back in lower. Maybe it even visits the 21. But I think it wants to go higher, and it's just respecting its moving averages. The reason why I was cautious last week was because of the index rebalancing and just, a lot of shenanigans, the end of the second quarter. And I'm going to show you that in a minute. But So I was cautious last week. I'm more bullish going into July as it's seasonally first 2 weeks of July in an election year, pretty strong. So I'm expecting more strength. But I want to point out something. If you're really, over analyzing the market, you could say, oh my gosh, look at these, pink volume bars. It's a disaster. The crash is coming. Institutions are getting out. Yeah, it may appear that way. And I'll just point out that this day was an options expiration in May, the third Friday in May. And this is the third Friday in June. And, these options expirations recently, I did a study of this century back to 2000. They're negative about 65% of the time, which is a high correlation there. High ratio. I mean, if you're gambling and you have 65% odds, that's pretty darn good. And then the end of the quarter, um, a rebalancing index, just shenanigans. That's why I don't want to discard one day or 1 week because I think everything matters. And I think you got to pay attention to these reversal bars. But what I want to see is it trade above the 1835 now, just like I wanted to see it trade above the 17,936 from that reversal bar on June 20th. And it did that. That's why I'm saying I think this thing wants to go higher. So if we look at the weekly, take a step back. Now let's look at those volume bars. The big volume bars are all blue. There's your buy. So I think you're seeing some stealth accumulation in the market. And the index here is 3 weeks tight, which kind of supports my thesis. And you could see, I mean, even a kindergartner knows, from 1522 to 18,000, that's a pretty strong uptrend. Hello, we're going higher, Daddy. All right. So anyway, I'm going to move on from the indexes because I trade stocks and I'm interested in stocks. I'm going to start off with Meta Platforms. Yeah, to me, you can see in the weekly, I go back to the weekly, it's a weekly review. You can see this, consolidation sold off with earnings report, stellar earnings, but they said, CapEx are going to spend more than Wall Street expected. And believe me, Zuckerberg's going to get return on his investment. It's just probably going to take some time for him. But you can see the setup here, the consolidation, the cup with handle pattern, the 514 paint by numbers buy point. But if I go to like a 10-minute chart, you can see how this stock, has been closing, kind of flat the last hour, kind of flat. It closes flat, every day it closes flat. But on Friday, woo, what happened here? Big sell-off. That's abnormal behavior. I think this will be rectified or corrected next week. I think it just has to do with, the end of the quarter. I believe it's an opportunity on Meta Platforms here as it was down $15 on Friday, pulled back to its 10, which, strong stock, it's above its 10 EMA, closed just a tick below it. If you're at your 10 EMA, you're doing fine. So that was Meta. Apple, pretty similar action here on Friday, pulled back close to its 10 EMA. It's a tick above it, and the Meta's a tick below it. But same thing with the action, how it sold off here on the last tick. So to me, I don't know. I just think that gets cleared up next week. Abnormal behavior. We'll get back to normal behavior in July, I believe, as we continue our uptrend. Microsoft, same thing. Pull back to its 10. It closed just a tick above it, kind of like Apple. And if I just go to the 10-minute chart, you can see this, shenanigans here. This is abnormal. It closes flat, most days, but on Friday, the last day of the quarter. And I know I'm being redundant now, just making my point. Google, another one of these Mag 7. I like starting with the Mag 7s because these are the stocks that move the indexes. And these are the ones that are going to be the winners in the AI revolution because they have the resources and funding to do so. It closed, nearly 1% above its 10. So, like I say, any stock above the 10 is a strong stock. This is Amazon. We had it on a ready list this week. It really ramped higher. I think it's going to have a problem with that psychological 200 level. And yesterday it pulled back after a strong week, though. If you take a look at the week, it was up 2.2%. It was a nice move for a company that size. 6 weeks in that flat base pattern. and closed 55% of its weekly range. I think Amazon's fine, but like I said, I believe it will have trouble at 200. It got up to 199.84 on Thursday and then pulled back. So Tesla, the same thing. I think it's going to have trouble with 200 on Friday. It traded above it and then pulled back, closed below it at 197.88. It did trade above this downtrend line last week, so I'm kind of liking Tesla a little more, even though it's below the 200. You can see the 10 and the 21 and the 50 are stacked and they're curling up. And eventually we'll, if the stock continues this pattern, it'll trade right through the 200. And the last one of the Mag 7 is NVIDIA. It had a surprisingly strong surge following a 10-for-1 stock split, but now pulling back, seeing some selling. If I go to the weekly chart, the last 2 weeks, it's seeing some selling. And I know the CEO is selling stock, but he's got a ton of it. So that has no bearing, I don't believe. This one is a 4% loss. The prior week, last week, 2.3%. So it's giving some back, pulling back, had a heck of a run. You can see that it ran from 50 up to 90, consolidated, then ran up to 140. Now it's consolidating once again. NVIDIA to me looks fine. I'm going to take a look at some of these semiconductor fabless stocks, which NVIDIA is the leader of. This is AMD, just consolidating in a base, made that high at 227, and now, got a little ahead of itself, and now it's just forming a base here, doing nothing wrong. Another one that I want to look at is Qualcomm. This is one that intrigues me because it pulled back to its 50. You can see that on the weekly. The first time it had broke out of this double bottom base, we had it here back at 175, and then it ran up, and it really ran up. So it got a little bit ahead of itself, kind of like the Nasdaq did. And then on June 18th, it was at 230.63, and now it's pulled back to its 50 for the first time since the breakout, and now it bounced a little bit. So I would expect more of a bounce than 2%, but we'll have to wait and see. Qualcomm is a really strong stock. And then last one I'm going to show, no, I lie, I got more. This is Broadcom. Announced a 10-for-1 stock split, ran up, probably got ahead of itself like the Nasdaq, and now it just pulled back to its moving average. That looks fine as well. The last one is Taiwan. Semiconductor, once again, breaking out of the double bottom base, looks a lot like Qualcomm, ran up, now it's pulled back. Now Qualcomm pulled back to its 50, TSM just to its 21. The semiconductors look good to me. I know, there's people saying that it topped, and I don't think this is a top. The negative Nancy's out there always looking for negative stuff. It just got ahead of itself and pulled back to a moving average. If the AI revolution is going to be, a success and it's going to be many, many years, this is just getting started. So I'm not looking for tops. I'm looking for pullbacks to buy. All right, that's it for that group. We had a lot of earnings reports last week, and I'm going to get to a few of them that I think were important that move markets. I'm going to start with retail because I like retail. And this is Nike, which is the big kahuna in this group. Okay, it's 114 billion market cap. It was like 190, but it's really fallen on hard times. And so when the biggest company in the group announces that it's, not doing well and has challenges going forward, the market's just going to sell them all off because, oh, if the big one's having trouble, they must all be having trouble. But the reality is that Nike's having, it's losing market share. It's having difficulty keeping up with Deckers and On Holdings in the athletic footwear group. And so, you're seeing this in Lulu as well. If I go to Lululemon, there's some private companies that are eating at its market share, and you can see the downtrend. So the market recognizes this. And so those two stocks have been selling off, but Decker sold off on the Nike earnings, and I think that's wrong. And I think the Wall Street got it wrong, and I think this is an opportunity. Yeah, Decker's broke out. This is one of our power earnings gap, ran up to what, 1,106. Now it's pulled back, but it's still above the 50, maybe just forming a base here. Uh, I like to see it get back above the 21, but for it to sell off because it's taking market share from Nike, this doesn't add up for me. ON, another one, definitely taking market share from Nike, who's relying on, Jordan shoes from the guy who played basketball 20 years ago. Tiger Woods left them for TaylorMade, and they just don't have any innovation. They have nothing that's going to bring, the younger consumer to market. And On Holdings and Deckers have, their athletic footwear is bleeding into the casual wear. You see kids wearing them, teenagers, you even see grandma and grandpa wearing, Hoka and On Holdings shoes. So I don't think there's any doubt about it. If you listen to the Foot Locker earnings report and Dick's Sporting Goods, you can hear it on the conference call, and they'll tell you Hoka brand and On Holdings are, kicking butt essentially. Sorry for the French, but that's pretty much what they said. Deckers, this is a setup and a base. Another one consolidating, had the gap higher. Now it was minding the 21, but this one sold off on Nike earnings as well. Like I say, when those big, 100, what did I say, 150 billion market cap stock, is crapping the bed, excuse my French once again, these others are going to sell off too. So that's what you're seeing with those. Crocs is another one that sold off. I bought this one yesterday because it kind of out of spite. When I saw it fall, down to 142, 143 in the early trading one, just on Nike. Are you kidding me? Nike has nothing to do with Crocs, but it's just Wall Street. They sell first, ask questions later. And then, cooler heads prevailed, and some people realize, hey, this is wrong. And somebody bought the stock, and it ended up still trading lower on the session, 1.5% on the session. And last week it was down, nearly 6%. Nothing changed with Crocs. To me, the reason why I bought it, though, wasn't just out of spite. It's because we're seeing this a lot lately, where a stock breaks out, runs up, and then pulls back to a moving average. This pulled back to its buy point, and even below it, pulled back to its 50 for the first time since the breakout. So I'm expecting it to at least trade back above 150, just on a little bounce. So that's why I bought it. Not totally out of spite, but sometimes when you see stuff like that, it's just an opportunity. You know, try to correlate the ugly shoe company with Nike. Nike wouldn't like that very much. Anyway, I think I'm going to move on, except for I have one more shoe stock, and that is Skechers, which pulled back to the 50 for the first time since breaking out. Why didn't I buy Skechers instead of Crocs? Because its buy point's way down here at 62, and right now it's right at 69. So it didn't pull back to its buy point, but it did pull back to its 50 for the first time since the breakout. So to me, that's usually a sign that it's going to be supported there. We'll find out. All right, I'm going to move on. More earnings reports. Micron Technology reported a strong quarter. The guide was good, but not what Wall Street expected. You have to really blow it out of the water now. But in, Micron's defense, it's been up, over 100%, I believe, in the last year. If I look at this, 104% in the last year. So, profit taking, buy the rumor, sell the news type of thing. I think this is fine. And now it's pulling back to its old buy point. Like I just saw with Crocs, the breakout from a base, get a little extended, get a little ahead of yourself, now pulls back near its 50. I'm definitely watching Micron. I did not buy it yet, but I'm definitely interested in it. It's kind of like Meta following its earnings report when it sold off hard like that, not to the same extreme where Meta fell following its earnings report. I think it was more than 10%, right? Yeah, just a little over 10%. Where Micron fell about 7% following, 7% following its earnings report. So similar. We have a good report. They say they're going to spend more on, CapEx, and Wall Street doesn't like it. And this one came back to a buy point area. So that one I am interested in, but this one did not carry over, which I find strange to the rest of the group. This Pure Storage, it went up on Micron earnings. Pure Storage is a strong stock in this strong group. This is the number one group rated by Market Surge right now. Western Digital, it went up following Micron earnings. So this is kind of a strange phenomenon where the big kahuna sold off and the others didn't. This is NetApp, just a Kelly Slater stock, minding its 10 EMA. That's a thing of beauty, hanging 10 on that surfing the moving averages theme, which is a swing trader's dream, man. There's nothing to do there but just count your money. So I like that one as well. A couple others not doing quite as well, in kind of in this same group. Supermicro forming a base, big volume bars here. If you look at the weekly, yeah, lots of selling in here as it pulls back. This was a late stage base, and yeah, just consolidating. So if the AI theme is going to go on for years and years, as I believe Supermicro will take part in that. Also, Dell fell with its earnings report, squatted on the 50, then it got a little bounce, and now it's back to its 50. So just consolidating in a base is Dell. And then VRT, this is one that really needs to form a base. It's been a massive runner. Last year it's up 258%. Thank you very much. You need to rest. All runners need to rest. It's below the 50. To me, it's not a buy here. You just got to bide your time, be patient, wait for it to set up, and then we'll strike like a cobra when the time is right. All right, and the last company that reported earnings last week, not a favorable response here. This is Aerospace Defense, and it fell more than 7% following its earnings report. It dragged GE down with it a little bit. GE now below its 50 here, but you can still see it's consolidating in this flat base pattern, but it's below the 50. And it's kind of a mixed bag because GE went down, but FTAI, this thing's making new highs, big volume bars. It don't care about AVAV's earnings report. You can see the big volume bars there, the earnings line heading due north, the RS line heading due north. Everything's pointing due north for FTA Aviation. You could say it's taking off. Oh, what a bad pun. All right. I'm going to go to the drugs because I like the drug stocks. And I'm not really in favor of the FTC and what they're doing to these companies, but you got to deal with the market that you have, not the one that you want. And this is Viking ramped up on this data up to nearly 100. They did a secondary offering around 85, got a ton of cash, and this thing is just consolidating in a base below the 50. It's a speculative. To me, it's still a speculative biotech play because they don't have any sales. They don't have any drugs on the market. The CEO said they're going to have a drug at NDA this year and hasn't done so. He's just obviously looking for a buyout. They need a partner, and I'm going to get to that in a minute. But I've got to look at Lilly. Lilly's the king, the 800-pound gorilla in this group. Broke out of a double bottom base. Kelly Slater stock surfing the 10. If you own that one, you've done very well. The last year, up 95%. Thank you very much. Double your money every year. We'll take that. I believe it'll be the first $1 trillion drug company. It's 860 billion right now, and you can see the earnings line heading due north after a little hiccup. There was some issues, but that's cleared up, and now it's heading due north. You can see how many weeks in a row is this thing up. Lilly, fantastic stock. A couple others with in the medical product drug group, Transmedics, another one that is one of our power earnings gappers, and it's just minding its simple moving average here, doing terrific. Breached 150 for the first time on Friday and closed above 150. So Transmedics looks fantastic. And then Intuitive Surgical with its Da Vinci machines, another Kelly Slater stock, just broke out of this base and running higher. We had that on our ready list, but she's gone, and I don't chase stocks, so we'll just move on to the next. But if you caught that one, congratulations. It's really been fantastic stock for many years. I have many friends who work at Intuitive Surgical, and they donated to my school. Very kind, generous people. So thank you for that. But yeah, Intuitive Surgical, fantastic company. Had a little hiccup with the pandemic, and elective surgeries were, a little challenging at that time, but we're beyond that. All right. Another favorite group of mine is the retail. Retail's easy for me to follow. That's one of the reasons why I like it. I'm kind of a simpleton. And I just want to point out one thing with Chipotle. It had 27 million shares in the float, and now it has 1.35 billion. So this has got a lot of liquidity. This is going to be a slower mover now. And it's more affordable for retail, sure. I just want to point out, earnings line heading north. I don't think that's going to change the fundamentals, but with all that supply, it's going to make this stock a much slower stock. And you can see there was some selling there, because if you had 100 shares and now you have 5,000, why not sell some? I don't know. 50 for one is a pretty extreme split, but $62, I don't know, traded down to the 50. Chipotle looks fine. It's just, I think it's going to take a long time for it to, gain traction here and really start making new highs again. Bros is one that I believe, this is my philosophy, this is my theory. I could be wrong. I believe they're taking market share from Starbucks. You can see, to me, this is still a stage one, IPO base. I know it's been since 2021, so nearly 3 years, but some stocks are just late bloomers, and I think this is one. I think they're taking market share. I know that we have a ton of them in our area. They're growing in the south. They're moving up the eastern seaboard. I believe it could be something like a Starbucks. You might call me crazy, maybe not to that extreme where it's got a 90 billion market cap. But if you look at Starbucks over the years, yeah, Dutch Bros could do something like that. And I like to hold stocks for more than a year because I don't like paying Uncle Sam. I'm a tightwad that way. But I pay my fair share. But anyway, Dutch Bros, my theme is they're taking market share in quarter after quarter. I think they're going to report strong quarters. I got a good entry price. So I'm planning on holding it. It seems to me like it wants higher. You can see the big blue bars. This tells me that institutions are supporting this stock. And you're just gonna have to, bide your time. It's gonna take a long time, and you can see it's got a lot of room for growth. Only 221 funds own it. That's gonna change as we get the June data here. This updates every 3 months. So, and you got some, the bigger funds in there, the growth funds. So to me, that's my thesis. I believe Bros is one that we're going to see, 5 years from now. It really took market share from Starbucks and went from a 7 billion market cap to maybe 20, 25 billion. I think that's feasible. And then the last one is Wingstop. People give me a hard time for covering Wing because it's grossly overvalued. Look at the PE, man. Well, if you're looking at a growth stock, 21, 34% sales growth and 66% earnings growth, you measure the stock by growth and not by the price to earnings. The earnings will come later if they continue selling like this. So that's my story, and I'm sticking to it. And the proof is in the pudding here. The proof is in the wings, not in the pudding. Maybe it's in the ranch dressing, but the earnings are going higher and the stock is going higher. And I'm not going to argue with the market. The market's telling you it wants higher prices. And same with Kava, same thing. This is the IPO base. This is a different type of IPO than Bros. This is their due diligence phase here, and now it's in its advanced phase, where that's where I think Bros is getting to now, the advanced phase where Kava wants higher prices, and I think Kava will have higher prices anyway. All right, a couple more stocks before I close out here. This is ANET, Arista Networks. We had this one on our ready list as well, but it broke out, pulled back to moving average, and now it's just extended. A leading stock that's extended. I wouldn't touch it here, but congrats to the longs if you own this one. CAMT, this one broke out. We had this one on our ready list too, and every time it pulls back to the 21, it finds support. So that's textbook action there, surfing the 21. CAMT, another strong stock. CrowdStrike, the only stock that I'm really interested in the cybersecurity group. I know Palo Alto Networks broke out last week, but this one broke out of a base and now just forming a shelf pattern. Since I mentioned Palo Alto, I might as well show it. I hate teasing people like that. Say, oh, you mentioned Palo Alto, why don't you show the chart? Well, you could say that it broke out of this 324, little pattern here, this Darvis box, if you will. And pullback Friday, but still, had a nice week, up, nearly 6% last week. We'll take 6% every week, won't we, folks? I believe we will. Spotify, this is one that I like right here, right now. Not to steal from Sammy Hagar. It does consolidating in a base, but to me, this is like Netflix of music, subscriber growth, off the chain, and just consolidating in a base. And I think if you don't get it here, you're probably going to regret it. By the end of the year, I think this is going to be much higher. But anyway, that's just my opinion. Consolidating in a base, supported by the moving averages. Yes, on Friday it had more of the shenanigans, but I think we're going to get back to normal. Look at that sell-off. And then, like I said, cooler heads prevailed. And it closed, let me see, on Friday, since I'm going to do this, 64% of its daily range. So yeah, it bounced off that sell-off, whatever that was. I know it shook some stops out for sure. Elf, this is one that I like as well. I believe this is like, Bros taking share from Starbucks, Decker's On Holdings taking share from Nike, Elf Beauty's taking share from the Maybelline, Revlon, the Estee Lauder of the world. And this is just a 7 billion market cap. Oh no, it's up to 11 billion now. Yeah, well, you can see its pattern here, sets up in a base, rips higher, sets up in a base. This is a 14-week base, and then broke out and ripped higher. Now it's a 17-week base with 32% depth in the base. This was 37%. Those are really nice bases here that Elf is creating. Building the right side of the base, to me, hasn't broke out yet. It's getting ready though. 5% off its high. Yeah, Alpha, I really like this one. And I'm looking for a vicious shakeout like we saw with Spot on Friday, just something like this. Every time it pulls back like that, it finds support and moves higher. So I'm looking for a shakedown here around the 200 level, and people are going to sell out, and then it's going to rip higher. And they're going to say, why did I sell Elf? It's at 240 now. I sold it at 200 on the shakeout. Be careful of that. Beware of that. Be alert for that. That's what I'm holding this stock, one of my larger holdings. That's what I'm expecting. I might add there. I don't know. We'll have to wait and see what Elf does, but definitely taking market share for sure. All right, that's it. Thank you for watching. Except for in honor of the great Steve Jobs, I have one more thing. I have a bone to pick with the FTC, Lena Khan, which is kind of getting in the way of business. Kroger's trying to buy Albertsons, which has a Safeway brand, and she's trying to protect the consumer by saying that, this is going to be a monopoly, antitrust. So she sued to block this $24 billion deal. Kroger, they own Dillon's and Food for Less, Fry's, Ralph's, Pick and Save, Fred Meyer. Yeah, they own a lot of the grocery stores, okay? But in your area, you probably have a Whole Foods or a Trader Joe's or a Sprouts Farmers Market. I know in Silicon Valley, my friend Conrad Zanato, he had like 5 supermarkets. You have local markets that you can choose from. We certainly have them here in Southern Arizona. This is not a monopoly, so they're really misguided blocking this deal between Albertsons and Kroger's. It's anti-business, and it's really bugging me. So that's what I'm saying. But that's not my point. That's not my point. I'm just giving you some examples right now. So that she's blocking the the Albertson Kroger deal. And then another one that she blocked, which I don't understand at all. Tapestry is trying to buy Michael Kors or Capri. CPRI, she blocked that $8.5 billion deal because Capri and Coach or Tapestry will form a monopoly in handbag sales between, Kate Spade, Coach, Michael Kors, and Jimmy Choo. There are so many handbag makers throughout the world, including, Gucci and Louis Vuitton and Chanel and Marc Jacobs or Burberry, Ferragamo, Prada. There's so many of them that this has nothing to do with any monopoly. Why is she blocking this? Why? Why can't Kors or excuse me, Capri and Tapestry, Coach, Kate Spade merge? I don't know why. She's trying to protect the consumer, like they're going to raise the price of handbags. It's not a monopoly, folks. This is completely ridiculous. And that brings me to my point of Novo Nordisk. trying to buy Catalent, and the FTC has asked for, by the way, Novo Nordisk, I believe, is 4 weeks tight here. Yeah, look at that tight pattern. I know it made a new high with the Wegovy being approved in China last week, but it's still 4 weeks tight because this Catalent deal is being held up. The FTC asked for more data from Novo Nordisk, and they provided it, but there's going to be a decision on this deal where they're trying to buy Catalent for 16 billion. And Catalent has manufacturing plants in Italy, Belgium, and Indiana. And if this deal goes through, it would definitely make Novo Nordisk the king of manufacturing. Novo announced plans, I believe just last week, that they're going to add on, to expand to their facility in North Carolina and employ more than 1,000 people. They're going to spend $4 billion. And their plan long term is to be, manufacturing, because there's not enough drugs available right now. There's a supply chain issue with, Lilly and Novo. They say it every quarter. This has been going on for a long time. But the FTC has blocked this deal, or they haven't blocked it yet, but they're asking for more data. And what I think they will do is ensure that Novo makes drugs for other companies. And I think that's where they're going with this. I don't think they're going to block the deal, because there's a lot of other companies like Bristol Myers and Pfizer and Merck and Amgen that are manufacturing as well. So this is not a monopoly. But you could see, I've just showed a pattern of how they're trying to block these deals where there is no monopoly and they're anti-business. So, they tried to block the Pfizer. They sued the Pfizer Seattle Genetics $43 billion deal, but that finally went through. And the Amgen Horizon $27 billion deal finally went through. It took a long, long time. So that's what I think will happen here, but it's going to take some time. And when Novo officially buys Catalent and they start manufacturing, I believe it's 2026, Novo will be one of the leading manufacturers of drugs globally. So that's kind of why I think this thing has stalled a little bit, this stock, because when that deal goes through, I think it'll be like a relief rally. So anyway, you can see from 138. This deal was announced, I forget when it was announced, early this year, maybe February or so. So in March, March 7th, it's just kind of been stalled here at the 138, 140 level. And I think once that deal goes through, if it goes through, Novo will have a leg up on manufacturing. I think the stock will climb higher. It'll probably climb higher without it. It's kind of strange, though, with Wegovy being approved in China. Now, it's only patented through 2026, so it's only 2 years of sales. And it did spike on that news, but pulled right back to the 10. And Novo looks fine. Another one of my larger holdings with Lilly. Anyway, that's it for me. Thank you for watching this week. Watch for Novo, 4 weeks tight breakout. We'll see. Anyway, thank you for watching at mcstockcharts.com. We never give up. A strong market means longer videos. Get used to it.